Well, David, we've seen the rand weakening a bit from Friday's levels. Of course, we were closed for that holiday yesterday. Friday reaching around 7.17. There's a bit of weakness coming through for the rand. Dollar strengthening ahead of the FOMC meeting this afternoon. What's the market really looking for from this meeting?
Stephen, two potential outcomes here. The one is that they embark on a second round of quantitative easing. That would be seen as a really dramatic action and a realization that things are not great in the US, and I guess the unemployment number and non-farm payroll showed that on Friday. Or the second option is that they take the interest that they've earned from their bond purchases and reinvest that into the market. That would be seen as a less sort of drastic action, but certainly all eyes on the Fed this afternoon because the US economy is showing signs of strain.
What do you think would be the best outcome, though, from that meeting, David? Because obviously admitting that the US economy is in dire straits still isn't going to be good news globally.
Yeah, Stephen, I think Mr. Bernanke would be very, very keen not to be seen to panic, but at the same time, they've really got to keep this road to recovery on track, and we haven't seen any employment growth since the sort of the crisis exploded in 2007, 2008. Official unemployment 9.5%, but unofficial unemployment much higher than that. When one factors in people who've given up looking for jobs, and other factors, technical factors. So it could be any one of those two options at this point in time. I wouldn't be surprised if they embarked on limited quantitative easing, just to show the market that they are serious about sustaining the recovery that we have seen, and I wouldn't be surprised if they did that.
Do you think the rand at this time is really just following what the dollar's doing? Because, of course, we saw when the dollar weakened a bit against the euro towards the end of last week, we had the rand going below 7.20. As the dollar strengthened, we've weakened along with that. Is it really just a dollar play at this stage?
At the moment, yes. I mean, the rand has done very, very well in the last few weeks since our own Reserve Bank didn't cut interest rates. You will remember that we were above 7.50 to the dollar, and I think at around about 9.60 to the euro. So the rand has done really, really well, and emerging markets in general with attractive yields have done very, very well, and we've seen inflows into the bond market more so than the equity markets. And certainly if the Fed does embark on a second round of quantitative easing, that will have an impact on the rand. At this point in time, that 7.19, 7.20 level, very, very key from a technical perspective.
Of course, we do have some local news this week, mostly driven by strike action. 1.3 million civil servants marching around the country today. They're threatening to go on a full-blown strike if the government doesn't meet their demands by Thursday. And at the same time, we also have strikes brewing in the platinum industry and also the vehicle industry. So this can't be viewed positively for the currency going forward.
Well, this is the great unknown, Stephen. International markets have ignored domestic factors for the better part of 18 months now, and domestic factors are far from confidence inducing. There's a whole host of things going on at the moment, not least of which is the question mark around media freedom, land redistribution, nationalization of mines. The international market has ignored those factors simply from a point of view that there's so much liquidity in the system pumped in by central banks, and investors across the world are looking for yield, and these things are not a problem until they become a problem, and then of course everybody heads for the exits all at once, and then that becomes a major issue, of course.
Of course, another sign that things might not be so good globally, particularly in the trade front, is China's trade surplus, which ballooned last month. So imports only rising by 23%. And the market had been looking for a figure of around 30%, though I saw, interestingly enough, that South Africa's exports to China are still rising.
Well, one of the factors that's interesting authorities around the world is to address these global imbalances, or so-called imbalances, and one of those is the lack of Chinese consumption, and of course the fact that the Western world consumes so much from the East, and particularly from China. And it was hoped that the economic growth would spill down into consumption demand in China. Clearly, according to those trade statistics, that's not happening, and the global imbalances are in fact growing and not getting better. Deficits around the world, fiscal deficits are a major issue. Certainly from a US standpoint, trade deficit is still a problem, and these imbalances are not correcting at all.
Of course, we also have manufacturing numbers coming out tomorrow, and that's, I think, June's manufacturing data. We've already seen the July PMI, which was still below that 50 level. So for June, would you expect the manufacturing sector to have remained under pressure?
I think so, Stephen, particularly with the strength of the rand. Just one caveat there, of course, our own trade data has been looking a little bit better, and one has to analyze that to see whether it's raw materials or in fact it is coming from produced goods that we're exporting. But I would expect the manufacturing sector to remain under pressure, and obviously the strong rand is not helping that at all.